Bill, great to have you back on the show. And before I dive deep into the nat gas market, which is always volatile, even in the best of times, first, I just want to talk about Skyfi, this app that you have created that is using satellite imagery to track things like, for example, data that could be valuable to nat gas.
Yeah, so we're democratizing access to Earth observation. We're making it basically trivial for anyone to control a satellite, whether it be an optical image, hyperspectral image, synthetic aperture radar image, to get data in order to, trade. I look at rig counts, and it's particularly bearish in natural gas since we measured natural gas. Other people might look at other ports, agriculture, you name it. Actually, your viewers would have more use cases than I could possibly think about once the data is easy and available to them.
So we're showing images of Freeport, Texas as well. And we know that in the middle of last year, Freeport LNG, that big facility, that terminal went offline, and the reopening of it has been delayed. So whether it's the warmer than expected, one of the hottest, I think, on record, January's right now that's playing out, or whether it's the fact that you had supply come offline and not be able to be exported to places like Europe last year, does that account for what has been a very dramatic fall in nat gas prices as of late? And do you expect that to continue this year?
Yeah, that accounts for it. But there's one more thing. The rig count is relentless. The producers are very good in bringing supply to market, and they've been planning for the long term. So in the short term, we have Freeport off, and we're monitoring with satellite data their repairs and when they're going to come on, and we have our estimates about that. But we have this growing supply that we're ready to feed the world, right, with Europe, Asia, with LNG, but it's staying home. And so we're mismatched on infrastructure right now, which we're monitoring with Skyfi.
Why is it staying home? Because they don't need it?
No, it's staying home because Freeport, it blew up, and it takes a while to repair these things. It's not only the repairs and the infrastructure and the steel and the welding, it's the testing, and it's also the regulatory process. LNG is one of the most regulated businesses there are, and when there's an explosion, it's going to take a while for you to get approval to start up, even after you've repaired the facility.
So if I were to take a look at some of those images that we just showed there, and I'm an ordinary layman, what can I infer from what I'm seeing that would help me be a better, smarter, richer trader, investor?
Well, I'll tell you what I look at. I look at car counts. I look at pipe equipment, new equipment brought in. I look at whether these cars are leaving to see if their job is done.
These are rail cars or repair
actual cars, actual automobiles.
People coming to repair the facility.
Yeah, nitrogen tanks, welders, pipes. We're looking at the equipment when it arrives, when it doesn't arrive, when it leaves, and we're looking at change detection to see where they are in the repair process, and that informs our estimate on when they'll be back online. Guessing when the government will give them approvals and stop slapping them on the wrist, and they've met all the new procedures that they're going to have to do, that's a little bit more difficult. But tracking the equipment, that's easy for us to do.
So just to wrap all of this up right now, Bill, the fact that you're continuing to be bearish on nat gas prices into this year, the fact that we did see Europe build up its supplies, although supplies of Russian gas, which we know are not going to be available to Europe later this year, do you think producers are going to have to shut in their production, their output? And if so, what does that mean, I guess, at a time where we've seen energy stocks, some of the biggest ralliers despite the bear market?
Well, remember, some of these large energy stocks, they don't just produce natural gas, they produce crude oil. So the Permian producers, natural gas is basically a byproduct. They'll give it away free. Some of the gassier producers where we have so much supply in the South Central and not a way out, storage is running high and it's getting higher. In Europe, that's a blessing, right? They pray to the weather gods. It's been extremely warm and prices have gone down despite the risk. And so here in the USA, we don't have the storage capacity for what I forecast to be the flowing gas that needs to go in the ground. And so we'll either have a rate issue or a full containment issue here in the summer.